All right, guys. What is going on, man? What is good? What is good, chat? Are you guys ready to learn something? Are you guys ready to learn something? Drop a one. Drop a one in the chat if you guys are ready to learn something today. I am gonna clip something for beginner traders. I did have a question. Excuse me, I did have a question that I got on Instagram. That I wanted to answer publicly as we watch NQ hopefully go higher. Hopefully go higher. If we go lower, then the market is a scam. Someone asked about lingo. That's kind of what their question was related to. They don't understand the language. I'm guessing it's not a English language barrier. I think it's more of the concepts, or maybe just some of the like what is liquidity, what is a mitigation, certain, I would even say algorithmic principles, you know, that might be troubling. Because again, I get it. It's not super common. It is highly specified. So that is what we'll go over. I did say 650 a few minutes ago. We should get 650 or the market is scamming. So we'll see if we can stunt in low probability conditions again. Of course, Twitter, if you trade today, you're an idiot. I think people are confused on who the idiot actually is. You know what I mean? There's 640. Let's see if we can get this final push here in the next few minutes. There's only 3 minutes left in this macro time. We may not do it, but I would like for us to do that early on. I would like for us to do that early on. But if we don't, then I guess we'll be okay. What's good? Eric, Adam, Ibrahim, Jorx, Mason, 2020. Jordan La Savage. Learning a lot in the last week, haven't you? What's good? Omar Jr. Scott H. Omar 670. Yeah. Okay, Omar. Y'all been on that nonsense recently, huh? I guess people do what they see, right? So I guess it's my fault. Chad. What's good, Roger? Thank you. I appreciate that. I did my 4 years and I got out of there expeditiously. What's good? Denelson and Julius. Yeah, I had to low resistant liquidity run out of there. You know what I mean? I had to go ahead and say, hey, second leg of accumulation, Corvette candles, back into the civilian world, baby, because this is not it. That was me. So, anyway, let's go ahead and clip this. All right. I'll have to start that over. All right. So when it comes to lingo, right? We do have a dictionary, by the way. It's somewhere in the Discord. You'll have to search it, or it might be in the pinned messages somewhere. I did make a Smart Money Stoics dictionary a couple years ago. That would be very beneficial if you need help with the terminology, the language that we use here. I forget, it might be foreign to some people. I've been doing this so long, it's normal to me, but to some people, they might not get it. They don't know what a low resistant liquidity run is, or a high resistant liquidity run, or fair value, or inversion. I'm trying to think of what else is like highly specific that most people don't know about. Maybe macros, maybe the MOP, the macro opening price, maybe manipulation or relative strength. I mean, there's a lot that goes into this, right? And other than the dictionary, it's a PDF basically, but other than that, there is a better order to watching content. Okay. And because when I started this channel like 10 years ago, but when I got back onto YouTube and we started the streams and I started making videos and all that stuff, I really did not plan that out in advance. So it wasn't like I sat down and said, okay, let me do a free beginner series and then let me move into this and then move on to that. I just said, hey, here's some sauce, let's go. Okay, and kind of just pushed it all out there. So in other words, it was relatively unorganized, we could say that. So for a more organized structure, right? Pun intended. I made some playlists. Okay, so if you're not writing this down, you're wrong. But the order that I would go through the content as a beginner or like even an intermediate, you got some experience as a 2 or 3 years of experience as a trader, I would go through. On my homepage, there's the playlist tab, right? I would go through the free beginner series first. Then I would go through the Smart Money Sniper course. Then I would go through the how-to series, the member-only series. I would watch all the market reviews in a row, even though, some of them are going to be old. And then the heavy hitters playlist to end all of that. So let's do this real quick as we sort of watch the Nasdaq kind of hang around a little bit. And most of this is free, by the way. The member only series is not, or the member only videos, sorry, is not. The market reviews are not. And I think 1 or 2 of the heavy hitters is a paid one. I don't remember off the top of my head. I'm pretty smart, but I'm not that smart. Okay. So that is the order in which I would go through if I were to, like, say, God forbid, but say I got in a car accident, bumped my head, lost all my knowledge about trading, and I would go back and watch my own YouTube channel. This is how I would do it. Free beginner series, smart money sniper course, the how-to series, member only series, market reviews, and then the heavy hitters playlist. That's what I would do. After that, I guess I may go into some of the live sessions that have been saved for members only. I'd probably go through that. But remember, those are an hour a piece. Those are an hour to an hour and a half a pop. So that's going to take some time to get through. And most people won't get through it. Appreciate that, Scott. Scott said market reviews have been the best for me. That's wonderful. I'm glad to hear it. Well, okay, since we have like 50 viewers, since we are live technically, what has helped you guys the most? Jonas getting ahead of me. Jonas said the Smart Money Sniper course changed my life. Very good. Appreciate that, Jonas. So for everybody else that's in the chat, is it the live streams? Is it the market reviews? Is it any of the series that we've done? Is it the heavy hitters playlist? Is it 48 laws? What do you think has been the most beneficial? And don't say Discord, because that's not an answer choice. Discord is not an answer choice in here. As far as content goes, what has been your favorite? Just so, you know, all the people that have been here for a long time can sort of hear from the community. Omar said 48 Laws. Mason said their masterclass. So both of those are in the heavy hitters playlist. Sean said watching via TV. Wow. I washed my beard and put some, what is it called? Conditioner in there. So hopefully I look like a lion or something, like Simba or Mufasa. Anyway. Cameron said, Cameron trying to get unbanned. You've been banned probably more than anybody else. Your unmatched consistency. Been here every week since you started on YouTube, and I can count on my fingers how many times you haven't shown up. Yeah. I think you meant on a hand, but whatever. I get what you're saying. I appreciate that. I appreciate that. H said live trading and recordings. I don't know. Scott said liquidity, MMXM, and mitigation. Some of the mitigation video, the function of a mitigation videos. Adam said printing charts before stream and annotating what you say. Oh, that's interesting. That's good. We got one or two people that are printing charts. Very good. Smart Money Sniper course first and the live stream second, said Jonas. Patch said market maker model masterclass. Even it said 48 laws. Sean said market reviews, MMXM, and how-to series, mitigation model. Eric said the live sessions and the market reviews. Yeah, live 4 times a week. That's a lot. That's a lot. We've been keeping it up this whole time too. You can see the beard in HD. Oh yeah. Screenshot that. Sean said live streams are hugely beneficial. The brevity, look at that word. Someone reads a lot of books. The brevity of the market reviews is very powerful, says Jordan LeSavage. There's a lot of noise in trading. So simplifying the price action of the day in 10 minutes is powerful for me. Oh yeah. That was the intention behind it. That was the whole reason why I started the market reviews like that, for a reason. I tried to keep them 15 minutes or less. Sometimes, once in a while, I'll go over. Sometimes. But I try to keep them 10 minutes, maybe like 15 minutes or less because of that. You know, the whole idea is when I was in the military, that's how I felt. I was like, I've been at work all day. I don't want to watch a 3-hour video. A lot of ICT's content, by the way, was like 2 hours, 3 hours. It was sickening. I'm like, I'm not going to watch this. This is too much. So I told myself, when I finally caved in and, you know, gave in to people, you know, begging me to teach them, I said, okay, I'll do it, but I'm not going to do 3-hour videos because of that. Bang. There's your highs, baby. Low probability conditions, my ass. Twitter. My ass, X. You're an idiot if you trade today. Okay. Sure. Sure. Sure, big fella. What's the high on that? 650. Bang. Look at that. Teaching with live price yet again. Okay. I thought you were going down to 3 string. I still might take Friday off the table. I still might do it. Okay. Anyway, so you heard from everybody. There's your, well, I want to say low resistance highs. And we got a relatively low resistant liquidity run. So I guess we'll start with that since we're here. But just to end this clip, that is the order of how I would do it. Free beginner, smart money, how to, members only. So the first 3, I'm pretty sure are free. Or it might be a mix. There might be like most of it free, and then I might have snuck in like one of the member only videos or something. So you don't have to just pay to learn. Okay, that's like my favorite thing. You don't have to pay to learn how to trade. I live stream for free. Most of the content is free. It's just the Discord access and the market reviews and some of the other stuff that's paid. Okay, which you don't have to. I'm not holding a gun to your throat saying, hey, purchase a membership. I don't believe in that. And I don't believe in charging a lot either. So there's that. But anyway, there's your second stage of accumulation. For this may not be terminus, but that would be a good TP on the day. So now we'll get into the details of that. Cool. Good recording right at like 12 minutes. So awesome. All right. So why would I post the creed? Right. Thank you, Jordan. I appreciate that. We'll go ahead and pin that one. Let me see. Go ahead and pin that. I didn't pay him to say that, by the way. It's not like some shady shit's going on. Omar said 670. I think we got that already. Yeah, we did get 670. Cool. Moving on though. Stunting in low probability conditions, right? Trading like a genius when they tell you you're a retard, right? I swear, bro, these pages get so many views, it's insane. Like, how do you have 50,000 followers and you're giving out bad information? That's so strange to me. Like, oh, that's just gross. That's just so gross, but, you know, whatever. Who am I to judge, chat? The 5-minute time frame, honestly, between the 1 minute and the 5 minute, it was really difficult to sort of measure any sort of original consolidation. Okay, I mean this was not fun to mark up because it's not clean, it's not textbook, if you will. Like, this would never go into a book. Right? But nonetheless, let me give you something here. Okay, here's your first nugget. Thank you, Jordan. Appreciate that. Here's your first nugget, okay? For those of you that don't know. When you have, all right? When you have equal highs or low resistance highs, right? When you have them, it's a wonderful target. We've been over this plenty of times. But what makes this higher probability, even on a day like today where Twitter says, don't trade, you're an idiot if you trade today, right? What makes that higher probability? If we go back, right, and we look at, what are we looking at? Regular trading hours. What can that give us? Not only our gap, which I didn't really plan on showing you that, but that is here, which is part of it. But the main thing, okay, is not the gap. The main thing is the time. The main thing is the time. 8:30 to 9 o'clock. So what do we do with that information? In the first 30 minutes of equities, which is Central Time, by the way. Okay, so there's 8:30 and 9 o'clock opens there. So we have this range to work with. There's your highest high. There's your lowest low. You see how that works? That's all we did. No indicators. No math, right? Everybody hates math. Nobody like actually loves math. You know what I mean? Nobody really loves math. Anybody who says that is just a liar. You don't love math. But anyway, there's your highest high and your lowest low. Now the lowest low, well, that's already been traded into and beyond that. So that price level for me, 25,560, that has no more relevance to me. I don't care about it. It's done. But again, here's your first nugget for today. Your buy side liquidity in equities open, meaning again, that's your highest high and your lowest low in the first 30 minutes. That pairs, not the fruit, but it pairs with this. You see that? Here's your second nugget. Whenever we have two highs together or two lows, but for this today here, if we have a set of highs, all right, and the high on the right is slightly lower, and you're gonna have to eyeball it. If it's a lot lower, it may not be it, but if it's slightly lower, that's good. So not only, okay, let's put the two together now. Not only do we have buy side liquidity at equities open, right? But that high is slightly lower than, this isn't London's high, but this is a high from like the pre-market, right? So same idea like the other day. Remember we talked about this the other day? Asia lower, London lower, and then equities AM lower. So you had multiple sessions going lower. So that means somebody's short. Where are their stops going to go? Recent high and recent highs. Here's your third nugget. Remember the other day I told you, that's all I do here is repeat myself. Remember I told you, let's go back to the basics. Number one, price will seek two things: liquidity and inefficiency, right? Liquidity and inefficiency. So guess what? If we look at this, is there any inefficiencies? Not open ones anyway. Do we have like an inefficiency left open to go lower? Not really. We have a lack of wick and maybe a gap. That's already been traded into. We have an imbalance here. I mean, price rolled right over that. And then we're lower. So we have no imbalances to reach for. So then what's the only other thing it can do? If it's not going to seek an inefficiency, what's it going to seek? Liquidity. Bang. It's no different than the last few streams. It's no different from, I want to say it was Friday of last week. Remember this? It was the same thing. It's the same thing. Equal highs and equities open high with the gap in regular trading hours. And we looked at it. And what did I tell you? I'm like, yeah, there's no inefficiencies in here. So it's probably going to trade for that. And then what do? Ran. This setup right here is almost identical to what we did here. Okay. So before I continue, do you guys agree with that? Drop some twos in the chat if you guys are picking up what I'm putting down here. It's identical, bro. Same rules. Same rules. Different day, different price levels, different day of the week, but it's the same thing. Eric, you're fired. It's the same thing. Oh, no, Patch, you're fired. Sorry. Eric, you're fine. You're rehired. No severance package. It's the same thing. Equal high, low resistance highs rather, paired with equities open high, no imbalances. Okay. We do get one here prior to that sweep here. So that sweep, right? I wouldn't necessarily say that's a turtle soup because we really didn't trade below like Monday's low. You could look at it that way. But nonetheless, you get a sweep, right? That always sets the low. Manipulation, there's your fourth nugget. Manipulation always sets the low. Excuse me. The market, I would say majority of the time, will not run liquidity without manipulation. It won't do it. I mean, if you go back far enough, you'll find like, oh, it ran liquidity without manipulation. Okay, well, then there's probably no trade there. But normally, normal, good trades, it's not going to run highs until it runs out a low or like a higher time frame low first. So this imbalance, that is there. And the market does seek that. And look how much it works that lower level, right? You see how random this is? Price is so random, isn't it? It's so random, right? Look at that. It's just consolidating in the lower half of this inversion. It trades through it. That's just shifting the state of delivery. Well, there's your fifth nugget. Need not up candle. That is one here, but that is one here as well. It's trading through a concept that was supposed to be bearish or likely to be bearish. That's not bearish. That's not bearish at all. So what was once sensitive to lower pricing, we'll say that. Look at that. Trades into it. Where does it not go? Lower half. Doesn't go to the lower half. That's highly bullish. There's your sixth nugget. Okay. We trade higher. Do we cross 50% there? Well, that doesn't take a genius to know. If you're, I would target this high, but whatever. Okay. Manipulation. We cross 50% here. So that's in a discount. We cross it again. We come back to a discount. Nugget number 7, just like I said yesterday, 50% in a market that is supposed to be bullish will be a discount. What is that right there? Price just stops on a dime, right? Here's some supply and demand concepts for you. Okay. I never learned that in supply and demand school. They never told me buy 50%. A lot of things are different here, huh? Boom. Body's respecting it. Then we launch. First leg, second leg. The markets are abundant, chat. There's nugget number 7. The markets are abundant. If you miss one setup, you can probably get in a little bit later or on like the next candle. And that's what that circle down here is for, by the way. Here's nugget number 8. Okay. Low, lower low, and then a higher low. So what's that? That's why it has a green circle. That's just me marking the chart saying, hey, that's a fractal low really, but it's an intermediate term low, right? So after that intermediate term low has formed, that next retracement here, bang, higher. Look at that. Look at that, chat. It's the same thing from the other day. It is no different. You remember this? This was yesterday, by the way. Remember we talked about this yesterday? From Monday. Low resistant highs. Somewhat of an original consolidation. Low. Lower low. And then it's kind of distorted, but nonetheless, it gives you that intermediate term low. Cross 50%, and then that next retracement sends price to the highs. Same stuff every day, chat. I may not create equal highs and then run the highs in this, later. I'm not saying that's going to happen every day, but I'm saying generally speaking, the roadmap is the same. Leave equal highs, run out sell side liquidity, intermediate term low, cross 50%, back into a discount, send higher. Over and over and over again. It's algorithmic. How else would the markets be able to do the exact same thing all the time? You see that? How else would it be? How else could price be that, let's say, consistent in its delivery? It doesn't make sense. Right? And if it don't make dollars, chat, then it don't make sense. Here's nugget number 9. What manipulates typically mitigate? Oh my God. Wow. This is life-changing stuff here, isn't it? We literally go through this all the time. All the time. Whatever notes you've been taking the last few days, you've been seeing the same stuff pan out. I mean, like, chat, seriously, has it not? You can type whatever you want in the chat. But have we not been going over this stuff? Have we not been going over the law of the return? Have we not been going over inversions? Have we not been going over premium and discounts? None of y'all has asked me what this big-ass gray box is. None of you have. John, what's that big-ass box over there? Don't worry. This is the type of stuff I tell you when I'm like, hey, you don't even know what questions to ask. Right. That gap from Friday, October 24th and Monday the 27th, right? That old gap there. We have been trading within that already. And yesterday we got back into it. And then today we're into it again. But price, okay, yesterday it traded outside of it. And today it kind of is too. But you can still see, let's actually go to 15 here. You can actually see what? That the halfway point, the bottom half and outside of it is discount. The upper and outside of it, but the upper half is a premium. You see that? So where was the manipulation? Below it. Where were all the setups here? The low risk buy at the low end of that old gap. Where was that inversion? In the lower half. So it's in a discount of the higher time frame concept. Where was this mitigation at? In the discount of the higher time frame concept. Come on. You see how that works? So when you're in a discount on the small time frame, and here's nugget number 10, when you're in a discount after manipulation, right? If you're in a discount on a low time frame and you're in a discount on a higher time frame, those are good trades. Buying low, right? Law number 1, buy low, sell high. So if we're buying low, anything in here is low, and we're selling high. Buy low, sell high. See that? This stuff is not that complicated. And I've given you at least 10 nuggets today. I really wanted to make the stream short, so I'll probably cut it here in the next couple minutes. I want to say Payetas is doing free lunch for veterans, so I might go have some free Payetas. I might do that. They charge a lot, bro. They charge like almost $20 for some noodles. It's crazy. I mean, I go there all the time, but hell, I'm gonna have to get one for free. You know what I mean? So talk about buying low, selling high. There's how you do that. But anyway, do you have any questions before we shut it down for today? And I'll put out a market view later, but do you guys have any questions about this stuff? Seriously, ask. I'm giving you stuff to write down. I'm giving you stuff to look at, right? Don't just look at my charts and think, oh, that's cool. Like, no. Look at this stuff. Pay attention to the details. Okay? Pay attention to the details. Stuff like this is not random. That imbalance here and price not being able to push past that, and this is all this is efficient delivery because it's printing on both, it's delivering on both sides. It's giving buy side, it's giving sell side, it's giving buy side, it's giving sell side. Then we get this move higher, right? When it comes back down, it doesn't go to the lower end. It's already been efficiently delivered. It has no reason to go back down there. That's why the algorithm will not take price down there. The algorithm is going to take price to the high end, but will not go to the midpoint or the low end if it is bullish. The algorithm will not do that. The algorithm will take it there, but will not take it down here. Okay? So that's at least 11 nuggets for you today. It might have been more than that. I wasn't really trying to keep count. What is a good winning percentage? Well, the reason I don't talk a lot about winning percentage is because the way that most systems view a win or a loss is strictly by P&L. So you could make $1, right? You can make $1, and that's going to count as a winning trade. I don't count that as a winning trade. That's a break even. You know what I mean? So I would say the best place to be is at a minimum like 50%. 50% and higher, I think is really good. If you're losing, I'm trying to word this correctly. If your win rate is less than 50%, I think you're doing something very wrong. You're either over trading or you're picking shitty setups. Now, the good thing about, let's say, win rate, all right, what it comes down to is more like risk reward. Okay. You could have a 40, you could have a 30% win rate, but if your RR is high enough, you can still be profitable. So there's a range of possibilities there. But to me, if you lose more trades than you win, you're picking garbage setups. You're picking trash setups. So here's my thing, okay? Here's what I think about when you say stuff like that. When your edge or execution is not working as well anymore. So this is what I think people do. And I could be wrong because I don't know how everybody does their own thing, but this is what I think happens, okay? People will take, let's say, a model, okay? And to keep it simple, let's just use the mitigation model as an example. Okay? This is a really quick and dirty version of it, but let's just say this is their model. I love the mitigation model, John. What people make the mistake of doing, again, I think this is a mistake. What people, I think, do is they take that model, they say, okay, this is the mitigation model, and they start just slapping it everywhere. They just start slapping it everywhere, right? Oh, low, high, lower, low, that's a higher high. Oh, that's a mitigation. Loss. Oh, well, this here's a mitigation. Yeah, but you took a loss already, and now you're scared, so you don't want to trade, and then it goes higher without you. Right. That's what I think people do. I think they take it and they form fit it and get wrecked. You know what I'm saying? Or like the inverse, let's say. High, low, higher, high. You know, we trade through it. Oh, that's going to be a short. You know, stop above this high. Stopped out and then going lower. So that's why I think doing that, well, number one, I think having one model is fucking retarded. Okay, sorry, I know I'm not supposed to be cursing, I'm working on it, but it's it just irks me when people put out dumb content. It bothers me because it hurts people, and I'm in this to help people, and when I see other people hurting people, I don't like that. Okay, I don't like that at all. But anyway, back on topic. I think people just try to form fit models like a cookie cutter. You see what I'm saying? And then when they start taking losses, they start second guessing the model. It's not the model. You're just trying to take one puzzle piece and form fit it into other pieces of price, or let's say trading, and it's not working for you. Well, no shit. It ain't gonna work. That's not how this works. The stages of price delivery are not going to change. Manipulation is always going to set the low. The low risk buy is always going to be after that. And then, you know, mitigations or add-ons are going to be later. That's not going to change. And that should give you confidence. Why do you think we do this all the time? Why do you think I'm saying in the Discord at like 1150 something, Creed, take me higher for NQ, and then 650, bang, and we go straight there. We don't even turn around. There's not even any drawdown on a lot of the messages that I send you because we're in the middle of expansion. I don't always say something before expansion. A lot of the times it's during expansion. Right. So you have to take that and go, okay, well, what's happening? Right. And you have to realize you may not get a mitigation that you like. The low risk buy is probably better anyway. You can see the mitigation forming before the candles even close. As soon as you see that manipulation, the next candle, you're going, oh my God, this just formed a big ass mitigation. That might be an add-on later, but we're down here. Well, if a mitigation's at the 575s and we're at 510, 520s, well, hey, we might as well long here. You see what I'm saying? So it's not just this model sucks. You have to know what conditions you're in. You have to know what's on the higher time frame. And then once you know that, then you can, let's say, find a model that you like. The next candle entry model, the low risk buy model, the inversion model, the mitigation model, the shift in the state delivery. We don't really have a return into that, but we do have this one. You see what I'm saying? So you have to have like at least 3 or 4 different ways of knowing how to enter a market. If it's going to expand higher, you want to buy a retracement. The first one is here, the second one is there. Minus, or like if you include these other minor retracements, that counts. But does that make sense? So it's not like the edge. Okay. First of all, I don't even know what that means specifically. Your edge. When I think of edge, I think of probabilities. The probabilities that it's going to go higher once it's in that mitigation and beyond it, the closer we get to liquidity, the better chance it's going to get there. You know what I mean? The higher probability, the closer we get to these highs. When we're down here, it may seem like, oh, that's a stretch. But again, it's giving you signatures. It's giving you signatures. So after a couple signatures, hey, the next up, the last thing is the second leg of accumulation. The second leg of accumulation arguably is the greatest fucking edge there is. Oh, John, oh man, that's egotistical. No, it's not. It's not at all. The second leg or the second stage of accumulation has already provided the most evidence. And it's already set the low a long time ago. But it's already done so much. The last stage, the caboose, if you will, on a train, right? The very last train piece is the caboose, right? And that's what the second stage or the second leg is. It's the final run to liquidity. That is one of the in my opinion, the highest probability thing that you can do. I think it's like just shy of guaranteed. So when it comes to edge, that's what I think. The probabilities that it's going to go higher is so stacked versus going lower. That is no longer 50-50. That is no longer, well, heads or tails. No, no, no. That's like 90-10. If not 95-5. You see what I'm saying? So if you only took, let's say, something in the first leg or the second leg of accumulation, and that's all you ever took, your win rate would be fucking insane. There's nugget number 12. Because the probabilities are so stacked. Okay? What you didn't hear me say was you're going to get the greatest RR. You're going to get the, low drawdown, high, profit stuff. If you get something wrong, or if you mistake, something, yeah, you're going to take drawdown. But the probabilities that it's going to those highs versus going lower is astronomically high. And I'll even reference the Market Maker Models Masterclass and that video I did on stop loss placement. If you remember, I said, in that video, I said, hey, if you ever just, you've been on a losing streak and you're just trying to get a win, and I told you what you can do. I said, if you're just trying to get a win, RR not important. If you just want, like, say, a 1-to-1, because you just want a guarantee, almost guaranteed winner, then yeah, you take the second stage of accumulation or the second stage of distribution. I told you that a long time ago. So anyway, I wasn't planning on ranting about that stuff today. But I can't help myself, dude. I was like, yeah, we're about to shut it down, and here we are 20 minutes later. I can't stop. I can't stop, chat. Anyway, Jordan, does that answer your question? Tio said, I hesitated to enter since yesterday looked way cleaner in comparison. Would you consider this a mistake? Technically, the setup was there. Well, Tio, honestly, it's hard to say. It's really, I think it just comes down to personal preference. If it's a bank holiday and you decided ahead of time, hey, I'm not going to trade today, then that's not a mistake. If you went in front of the charts and you had the intention of taking a trade and then you purposely didn't, yeah, that I think is a mistake. So you'll just have to be honest with yourself and figure that out. So what was your intention? And that's what it would come down to. I would think it's not a mistake, but again, if you thought it was a good setup and it's something that, you like and you didn't take it, then yeah, that's probably a mistake. If the concept doesn't work, it's not the concept, but your interpretation of it. Right. The concepts are not going to lie to you. The concepts aren't going to lie. It's going to provide evidence and then go where you think it's going to go. Okay? But if you get it wrong, that just means you missed something on a higher time frame. Okay? Like if we took that mitigation here and then it just traded lower, then yeah, you missed something down here. Like maybe lows or something. These lows actually got swept here very not aggressively, very shallow like. But let's say if these were equal lows or something, then yeah, I would have waited for that to get taken first. So look at that, we're blasting. Excuse me. And that's another thing too, Mason. The earlier concepts do offer the greatest RR. They offer the lowest risk amount, which I think is a great thing. There's nothing wrong with that. The later trades offer the highest probability, in my opinion. But the point is framework. if price is matching the framework, meaning the market maker models, if it's in sync with that, you're watching the algorithm do what it's been coded to do. How can the markets not be coded when they do this same thing every day? Multiple levels of distribution, manipulation, lowers by first leg, second leg. It's been doing this since I don't know how long. Whenever the markets officially swapped from open outcry to algorithmic, this is what happens. So once you see that, and you see like, oh, it's manipulating, oh, it's giving a low risk buy, but I didn't take it. Okay, the market is going to give me 1 or 2 more entries before it takes off. It may not be the entries that you want, because you might think, oh, well, the move's already happened. No, it hasn't. No, it hasn't. Half the move may have happened, but it still has another half to go. You ever bought a sandwich, only ate half of it? You went to a restaurant and you bought a fucking steak and you only ate half of it and you didn't want the other half? Get out of here. You're a liar. You ate that whole damn steak. Don't lie to me. Don't lie to me. I'm only going to eat half the steak. For what? You're an idiot. You're going to have the whole steak. So quit your bitching and eat the second half. Take the second half. It's not retarded for capturing half a move. It's not. If there was two $50 bills on the ground, right, and you and your buddy are there, one person going to take both? Or are you going to be like, hey, bro, how about you take a 50 and I take a 50? And we walk away better men. Same shit. Oh, no, bro, I'm good. I don't want the $50. What do you mean? Get out of here. So anyway, I don't know why we got on this topic, but I love just going off and doing random stuff. I forgot even where we were in the chat at this point, honestly. Yeah, psychology and health habits definitely do matter too. Like if you sleep in, for example, and you miss a setup, yeah, that's 100% your fault. So can't really do anything about that. Just take accountability. Timing for me was the problem. I wanted a long so bad. My session was already over. Oh, I hear what you're saying. Well, this is lunch, and this is also lunch too. So I can see that. But 10:55, uh-oh, 10:50, right? What is that? There's your macro. And then our 12:10, we actually run it just outside of a macro, which probably means, remember my theory was if we don't run liquidity in a macro, it's probably going to be a continuation. And we've continued. I might be onto something. I might be onto something. And right, Jordan, I use that analogy all the time. Baseball players make millions of dollars just hitting singles and doubles, and only maybe a home run every here and there. But singles and doubles win points, and points win games. So you're going to be what? Well, I couldn't get into the Hall of Fame. Like making millions isn't enough? Get out of here. Come on. You said I'll cut it short, so I walked away, grabbed some food. 15 minutes later, you're still alive. Yeah, I know. I try to. Like, I want to cut things short because I'm hungry, chat. I'm starving, bro. I had some chips, but that's about it. I've had paellas on the back of my mind. But anyway, you see how easy that was? How many live streams have I taught you with real price? This is where we're going. This is why we're going there, and we go there. It's so easy. It's easy. The execution, the patience may not be as easy. But analysis is very easy. And once you know certain things, then you can start working on the discipline, the execution, the trade management,
the journaling, the you know, the performance metrics and stuff like that. I'll close it with this. I think when people review their performance, number one, I think they try to shift the blame to other stuff. They try to blame the model. They don't blame themselves. Let's say they do blame themselves. A lot of people don't know how to look at their performance and figure out like what they need to improve on because they don't even know what they're looking for. You could be missing something in your analysis that's causing you to lose. i.e., earlier in here, like, oh, that's a short-term mitigation. Well, it might be, but this is the manipulation. That was not. It's a very small time frame manipulation. But given that we rallied aggressively to build stops there, it rallies to build stops and then sweeps those stops. So you got that wrong. You jumped the gun too early. You know what I mean? But if you never look at mitigation, you would never look at this like trade management. Do you know what happened? I can guarantee this is exactly what happened out there. Somebody either longed this or longed this. Market made a new high. They took their stop loss wherever it is. It could be at the low or whatever. And then they jammed it higher to wherever at a new high. And then the market bumped them out to go higher. But you remember what I told you yesterday? You jammed your stop up into a mitigation. And the market is designed to not just to come back for trailing stops, but it's designed to literally come back into a mitigation for the function of smart money to get out of their positions. So you're exiting where smart money is entering. So you get stopped out. And yeah, it's in a profit, but then you miss the rest of it. So you'll never learn how to improve because you don't understand a mitigation. You don't understand the function of a mitigation. You don't understand algorithmic price delivery. And that's why the markets get you out before going higher. Or let's say get you out, break even, or a loss before going lower. And then you like get mad. You're like, oh, this is bullshit. Trading is bullshit. John Fib is bullshit. No. There's just a lot of stuff to look at. And most people don't know what they're looking at. They don't know what to look for. You can't improve on something you don't know is a problem. You know what I mean? You could be drinking. You could become a functioning alcoholic. Functioning alcoholics don't think they have a drinking problem. They don't think they have a drinking problem because they're functioning. Well, I have a job and I have this and I have that and I take care. I'm never late, you know, and all this stuff. They don't see that they have a problem. They don't see the damaged liver. They don't see, you know, the actions that they took when they were drunk, cussing people out or, you know, saying hurtful things to people, and then they don't remember it the next day. You don't see that you have a problem because you're not looking in the mirror and you're not looking beyond the surface of things. You don't go in depth into, you don't go into the context of things. And this is why we go over so much of the technical analysis side. Once you understand, not all of them, but once you understand a lot of the technicals, you will then understand the rest of it, the psychology and the money management. You'll know, hey, traders just got stopped out. Oh man, I remember at a lot of my trades, I would get stopped out and then the market would go higher. Okay, well then if everyone else just got knocked out, what do you think is going to happen? The market's going to go higher. So that's why we wait for everyone to get knocked out, then we get in. Here's nugget number 13. That's why the best setups are right after everybody gets knocked out. You've heard that before. That's not just a technical thing, but you would, when you can see that and when you can feel it inside, you'll know it. You'll know it. Do you guys understand what I'm saying? Drop some threes in the chat if you guys know exactly what I'm talking about. You see a setup and you go, oh man, that used to stop me out. I'd get stopped out on something like that. But now I can get in and I can have a very smaller stop loss and I can have some confidence here because everyone else got knocked out already. So it shouldn't come back to that low. And even if I'm wrong, okay. Well, if I'm long in here somewhere and my stop is right here, but my profit potential is like, let's say that new high or equities open high. Well, then hell, we got a low risk, high reward setup. Risk, reward. Low risk, high reward. And that's worth it. From a technical standpoint, yes, but you will truly understand it when you can feel it too. You go, oh yeah, this is actually a pretty good setup. And I'm confident because this would have stopped me out, but I waited and I practiced patience. And now that I know, yeah, everyone else, they got pooped on. All right, now it's time. Then you go. Okay, let me ask you this in closing. How many times have you tried to catch a low, you got stopped out once or twice, and then you check back on the charts later and it's way up, and you're mad, you're upset, because you knew the market was bullish, but you got in too early, or maybe you revenge traded, or maybe something like that. But the market still went. Drop a 4 in the chat if that's happened to you at least once, or maybe a couple times in the day. You got stopped out once or twice, maybe 3 trades, and then the market went to the equal highs. Well, John said equal highs are always a target, man, but you know, I took some losses. The market still went there, but like I'm losing. What the fuck? Right. This is why, not just the technical side, because there's 3 things to trading: the edge, your strategy, money management, and the psychology. And part of that psychology is patience. Okay? You go from the losing crowd to the winning crowd when you have patience. There's nugget number 14. All right? You will do better. You will improve drastically if you simply acquire patience. Allow other traders to try and pick the low. Let them do that. When you see, okay, and it's a storyline, you can look at it and go, yeah, I could see traders trying to buy that or buy that or buy that, or when the market rallied and then they ran that. Okay, now, right, that consolidation, smart money's buying, smart money's accumulating. But I want a little bit more evidence. I may not be too confident yet. Okay, then we cross 50%. So that's how you know, right in here is your last opportunity to go higher. You have to wait. You have to wait. You have to have patience, okay? If you jump the gun, if you get in too early, this is what happens. All right? 10:30, that's the first 2 hours. So the first 2 hours of the day were lower. But then, I can't really do math. The next 2.5 hours, almost 3, were bullish. So you have to allow the market to get people out. Then you can get in sync. All right? So there's, again, chat, there's a lot that goes into this. But you will understand it once you start seeing this stuff in your history, in some of the trades that you've taken. Oh yeah, man, I've been stopped out at the low of the day before. Bro, I've been stopped out at the low of the day a lot. Okay? How many trades do you think I've taken in 11 years? Or 10 years? 11. I don't know how long it's been. It's been a long time. How many times do you think I've been stopped out near the low of the day, or sometimes right at the low of the day? It's demoralizing. That's absolutely demoralizing. To long, get stopped out by like 1 or 2 ticks, and then the market booms. That will frustrate you, bro. That will absolutely frustrate you. But when you take a break or a couple of days off and you come back to the charts refreshed, and you know that the markets are designed to do that, you can come back and you can have the patience to, okay, I'm not going to trade. 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 Oh, wait a minute. Now we've got manipulation. Okay, maybe now I can get in. Maybe now I can get in later, or an add-on, and then go. And then the first time you do that, oh man, you get all the confidence in the world because you finally see it, and you finally get it, and you finally understand it. And you go, yep, everyone got knocked out. I'm in, or I'm in, done. And you get the upper echelon, bro. You get into the top. You know what I'm saying? I'll leave you with that. Okay. You get elevated. I'll put it to you that way. All right. So with that, y'all be good. Y'all be blessed. I gave you guys like 14, 15 nuggets today. Okay. But it's just the same stuff that repeats all the time. Accumulation. Here, sorry, I lied. I'll give you one more thing. I'll give you nugget number 15 so we can end on like a decent number. Accumulation, manipulation, distribution, AMD. Back to the basics, baby. Back to the basics. Y'all be good, man. I'll see you tomorrow. Same time, same place, same price.